See, in the last 3 to 4 years, I think the entirety of the global financial market has opened up for Indian project finance. Because typically construction finance is the toughest kind of finance to get, right? Because once you take construction risk out of the equation, then your PPA structures are okay, then your rating will be in that double B category, unless you are in a, your counterparty is very bad. So now coming to the construction risk and the financing for that, I think we have some very high quality project finance teams sitting in these banks slash finance, FIs who have been doing this. What they have been able to do is they've also contributed towards the PPAs. So one of the reasons why SECI in India has been very successful is because they have set up this iterative learning process. So they've listened to developers, they've listened to domestic banks, they've also listened to international banks, and they've been very open in their approach, and all of this has led to reduction in the risk. This was mentioned in the earlier panel that you have to continuously go towards reducing the risk that is there in the base contract, the base EBITDA of the project. And once you're able to do that, your financing costs will automatically come down. So for us, I think we have been a beneficiary of that. In Adani Green, we raised financing through a construction facility structure where we got in a clutch of foreign banks to come in about $1.65 billion. This is the largest such facility in India. And it was for the hybrid project. The first time anybody in India was doing a hybrid project, which was being taken to the global banking market. We did about 2.2 gigawatt of hybrid projects under this structure. And we are very thankful for our banks to have taken that risk and to have demonstrated that faith in us. And we delivered to them because the projects got operational within timelines despite COVID. But what we did see in this process is that the sophistication that is there and the increasing sophistication with each and every process. So the banking market, I think, has done its bit. Now it's important that how do you get the institutional investors? So we need more Bayfronts, more Pentagreens, we need a lot more of them. We need bigger size and scale being taken by these institutions, because what they do is that through innovative structures, they are channeling funding from US insurance companies, European institutional investors who would typically not be able to match the risk profile what a construction stage project provides. Because once that market opens up, it will bring down the cost of funding, but more importantly, it will increase the volume of capital available. And that is going to be very, very important for green hydrogen. Because renewable right now is an established technology, it's an established process, it's more cookie cutter of nature. So, I think financing is there. When it comes to green hydrogen, there are certain risks, there are technology risks, there are certain risks that people need to appreciate. So for that, you need a little bit more in terms of what has already been done. So we have to build from where we've got to. But I think, at least from an India perspective, the global financial markets as well as the global banking markets are doing its bit when it comes to renewables.